Hey everybody, so in today's video, I just wanted to do a market overview for the week, and I just wanted to talk about next week a little bit. So just covering the news, earlier this week, we had the Eurozone CPI that came out, and essentially they were forecasting 7.7% year over year inflation, but we got an 8.1% reading, so that's definitely pretty bad for inflation over in the Eurozone. Now, other news that we got was we got Microsoft revised guidance. So earlier in the week, we basically had the Form 8K that came out, and basically they gave us some revised guidance, which we can see down here as we scroll down. So when we see right here, they gave us the guidance range and the revised guidance range. So people are making this sound like it's absolutely horrible, but if we're looking at the bottom line, it's affecting 250 million in net income. And the way that that affects the diluted earnings per share is 3 cents. So not a whole lot. If we're applying like a 30 PE to Microsoft, then yeah, it's going to be like 90 cents of price fluctuation for the stock. So honestly, this is probably going to hurt other companies that have lower margins much more than it's going to hurt Microsoft. So it's clear that Microsoft is kind of brushing this off just because, it's not that big of a deal. It didn't really affect earnings that much, as you can see here. Now, the other piece of news that we got was the European Union approved the sixth sanctions package on Russia, which includes phased in oil embargoes. So the embargo will cover 90% of previous Russian oil imports. So that's definitely going to cause oil prices to rise more. So we're probably not going to see relief in the pump anytime soon. But on the same note, OPEC Plus also decided to increase oil production by 648,000 barrels a day starting in July. But I don't think it quite outpaces the oil embargoes. Now, another piece of news that we got earlier this week was China's third aircraft carrier, which is called the Type 003, may come afloat soon with which could help them expand their military operations on the seas. So you can kind of see why this might be a little bit worrisome just because of all the tensions with Taiwan. So maybe this might have to be something that we watch out for in the future. And today, the most important news today that we got that definitely shook the markets was this US non-farm payroll. So when we look at this, we were forecasting, and in my opinion, we definitely lowballed this. So we were forecasting 325,000, we got 390,000. And the way that this works is that when it comes in higher than expected, it's bullish for the dollar. Now, the dollar rising is not that good for equities. So if we go over to the US dollar index, we can see that the dollar rose 30.35%. So this is kind of why we're selling off today. So definitely a lot of pain today because of the dollar, but we're not really sure where the dollar is going to go from here. It could continue rising, could continue falling, who knows? But the one thing to pay attention to is on the weekly time frame. We did have this massive gap right here. We filled it. So where do we go from here? Not too sure. So we'll definitely see. It'll become a little bit more clear next week. And also today we had an announcement from Elon Musk. He's always messing with the markets. Today he said he's thinking the economy is in a very bad state and he plans to cut 10% of salaried staff. So definitely saw a sell-off in Tesla today. Um, so yeah, definitely some bearish news there. Now, looking into next week, the economic data that I kind of see and pay attention to is we have initial jobless claims on Thursday, June 9th. We also have the ECB talking about interest rate decisions also on June 9th. And on June 10th, the big one, we have US CPI. So if I go right here, US CPI, we're going to have month over month and year over year. If we're looking at the month over month, we are forecasting 0.5%. So we'll see if we get there. hopefully if we're in line, then, nothing really happens and we have a flat week. But obviously, if we miss, then yeah, we're going to see a lot of pain. Now, the year over year is 5.9%. So it's overall going to be a little bit lower. It's expected to be lower than what we got last time. But, lately we've been missing a little bit. So we'll see how that turns up. And I do also want to talk on Monday, June 6th. We have some very important data, which is basically Amazon is going to have their stock split. So we're going to see how that affects the market. And also Apple has their worldwide developer conference. So they'll actually unveil some of the next generation software that's going to come out here in the fall. So I do have all of this economic data in the spreadsheet where I talk about the weekly risk ranges, which I'm going to jump into right now. So going into the weekly risk ranges for Tesla. So Tesla right now, we're trading at 703.55. The deviation for the weekly risk range is 58.90. So the lower range is going to be 644.65, so right around this area. The high range is going to be 762.45, so right around this area. So now, do these risk ranges make sense? Well, to me, they kind of do. So if I zoom out right here, we can see that this was like a little shelf of support right here, as you can see. But, we could fall a little bit more, possibly down to make a double bottom here around 620-ish. So that is very possible if we do get down to these areas. And the upper risk range was 762.45. So does this make sense? Well, yeah, it kind of does make sense because we have this support right here, that support right there. And if we go back right here, we have resistance right here. So that is the weekly risk range for Tesla. I do want to note that there is a potential that we could have a inverse head and shoulders here. So if you kind of see it right here, that's the shoulder, that's the head. That could be the shoulder, but I don't know. And we did have that death cross not too long ago. So to me, it's a little bit uncertain. But what I do know is if we do break underneath this area right here, which is right around, let's zoom in here, 700. If we break under 700, we're in trouble on Tesla. And especially if we close under 700. So this massive bar that we had here back in February is probably going to be a very key area that we need to stay above. So as you can see, this whole day we've kind of been messing around with that area, but we never quite broke underneath it. So you can see it's acting as pretty strong support. So do watch out. There could potentially be a very big flood of selling if we ever do break underneath this. Now going into the next stock, which is Apple, the deviation for the weekly risk range is $5.77. So that's going to give us a low range of 139.61, which is right around here, and a high range of 151.15, which is right around here. So this high range makes perfect sense to me because as you can see right here, this is kind of where we rejected. And then when I do this line right here, you can see we kind of rejected this area right here too. So the low range is 139.61. Now, this doesn't make as much sense to me. I do think if we do get down to these levels, we could go all the way down here to 137.31. So this area makes a little bit more sense to me. Right around here. So that's like 137.71-ish. But do be careful. If we do get down to this area and we break underneath this, there is not a whole lot of support. As you can see, the last time when we broke underneath this, it was a quick trip down. And that actually went all the way down to like around 132.61. So that was a quick trip down because there's not a whole lot of support, as you can see here. So on the upside, if we do break past this area right here, where do I think Apple can go? Well, I think it could just hit this top resistance line. So possibly around 154-ish. So yeah, that's kind of like the area that I'm looking at, this right here. Now going into the next ticker, we are looking at SPY. So the weekly deviation for SPY is set to be around $9.94. So that's going to give us a low range of 460, so right around here, and a high range of 420.48. So that's right around here. So does that make sense? Well, SPY doesn't make a lot of sense to me. SPY is always chopping around, doesn't really have a very clear trend. So, I'll probably trust this options range a little bit more just over TA, just because, there's not a whole lot to go off of here. But the one thing I do want to know on SPY is that, we had this strong momentum. Now we're just chopping around sideways. So we're kind of having some indecision. And essentially what we need to see to fully be a little bit more bearish is that we probably need to close this area right here and fall underneath. So in my opinion, if we fall underneath this 405.26 area, then things definitely do look a little bit more bearish. And this does end up looking more like it's just a lower high. So if we do break below that, then I do think that does look very bearish. And who knows, maybe we could bounce off at one of these areas right here. But never really know. I mean, right now, just looking at this trend right here, we did kind of break it. We're kind of like on the cusp of it. Nah, I lied. We kind of broke it. We definitely broke it. So to me, this doesn't look all that good. So, if we are to just shoot up to the upside, well, yeah, 420-ish will probably be a likely area that we could see some resistance. And the reason why I'm saying that is if we zoom out a little bit, we have this major wick right here that could act as resistance. So this was right around like 419.82, which is essentially 420. And we have this old area of resistance and this prior area of support. So that's around 420.63. So this area right here could be an area that we do reject to. And if we do make it above here, well then we've got the 50-day moving average right here at 423.94. So tons of wind at our face, basically. And if we fall below all of these levels, well then I'll get to that in another video. So right now we're just taking it step by step, see where we go from here. I do want to note that on the 1 year time frame, we've got the 20-day moving average right here at 401.88. So if at any time we do break underneath that, things do look a little bit more bearish. And you know what? The week just ended, so let's take a look at the weekly candle. What would you look at that? The weekly candle is basically showing indecision. Okay, yeah, so thanks for that. Doesn't really help at all. Now let's take a look at the Qs. So the deviation on the Qs for the weekly risk range is $10.26. So that's going to give us a low of 295.94. So it's right around here. And a high of 316.46. 316.46 is right around there. So to me, this high kind of makes a lot of sense. Because if you look right here, there's support right there, and then kind of like resistance right around here. And then this area of support makes a lot of sense to me because, see right here, resistance, support. So these areas make quite a bit of sense. And right now we're slightly above the 20-day moving average. 20-day moving average right here is at 299.07. So if we do break below that, things do get a little bit bearish, especially if we break underneath that the options low. So we do have this downtrend line, and we could just tap this again. Now, if we do have a bullish run to the upside, well, I would think resistance would definitely show itself right here at the options high. And if we were to get back above that, then the 50-day right here, right around 325.92. Now going over on IWM, there is something very interesting on IWM I want to point out before we even talk about the options. We've got this little trend line going on right here. We are very, 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 very close to breaking this. So if we do break below this 20-day moving average, that is going to break below this trend line right here. So that's going to be right around 186.20. So do watch out for that. IWM looks very dangerous here in my opinion. Could always just bounce right here and then maybe it'll retest this 200-day. So the 200-day is at 190.71. Now if we're talking about the risk range, the options deviation is saying $5.85. So the low range is going to be 181.21. So that's right around here, 181.21. So right around there. The options high is 192.91. So that's right all the way up here. So that's going to be above the 200-day moving average. So does that make sense? Well, yeah, that makes perfect sense to me because look, there is this tiny little gap that we can get filled right here. So, maybe we can make a quick run, fill that gap, and then who knows what happens after that. Now the options low is saying 181.21. Does that make sense? We know 181.21, where is that? Yeah, that does make sense because that's this area right here. So it was almost support right around here. It was acting as resistance right around here. So yeah, I could definitely see that. So yeah, definitely do watch out. If we break underneath that, it spells trouble. Now let's take a look at Google. So Google, the options chain is pricing in $88.30 a deviation. So that is going to make the low 2,203, basically 2,203. So right around this area right here. And the options high is going to be 2,379.58. So right around here. So does this make sense? Well, yeah, it does make sense because if we do run a little higher, we run into resistance right here, as you can see. So this was a prior support. And if we look right here, it was prior resistance. And then it also acted as support right here again. Now this area right here is also, if we take a look, it was acting as support right here. When we broke it, we had this little gap. Now let's just zoom out a little, see if we could find anything. Nope, so it's basically just this price action right here. So if we do break below this, I do think we could go back and fill this gap right here, right around 2,170. And then we'll see where we go from there. We do have this trend channel that's kind of working right now. So if we do fall below that, we could just hit the bottom of this trend channel, which will probably equate to something similar to a double bottom right around here at 2,044. So if we do break above this level right here, I do think we'll tap the 50-day moving average, which is right around 2,452. So that's it for Google. Now if we are looking at Microsoft, the options market is basically saying that we could have a $9.10 deviation. So the low range is going to be 260.92. So right around here. And the high range is going to be 279.12. So let's see, 279.12. It's right around there. So does this make sense? You know, it does make quite a bit of sense because we did bounce off right here, as you can see. And then let's zoom out a little bit. So it is almost catching this prior resistance right here. And then as for the options high, well, it's catching this prior support right here. And it's very close to this 50-day moving average right here at 280.51. Now, if we're looking at Microsoft, we do have this longer term trend channel. So if at any time we do rally hard, you know, this the bottom of this trend channel can always act as significant resistance. So do keep that in mind with Microsoft. And if we do fall, we do have this shelf of support right here, the support trend line. And with Amazon, we are expecting a $145.75 price fluctuation. So that makes the low range right around $2,301.25. So it's 2,301. It's right around there. And the options high is going to be 2,592.75. 2,509, so right around here. So if we do look, does this make sense? Well, to me it does make sense because if you look right here, this was a prior resistance, and then when we broke past that, we had this rally. So now it's going to act as support. This area right here, which is right around that gap fill area, is acting as resistance for the options chain. And then if we look at price action right now, we are smack on the top of this trend channel. So, you know, to the upside, it's saying, you know, we could go all the way up here. To the downside, it's saying we could go down here. So, you know, if you were to get in right here, then the risk to reward isn't all that great. And let's say we do break above this area. Well, then there is possibility that we could overshoot and fill this gap and hit the 50-day moving average, which is right here at 2,701.47. So to me, you know, it's going to be very interesting how this stock split works out for Amazon. Now, I almost forgot something very important. I want to go back on Apple, and let me zoom in here. Something we don't really want to see right here, death cross. So as we can see, the 50-day moving average is 158.94. 200-day moving average is 159.10. So we officially have the death cross. Never really a good thing. Now, last thing I just want to talk about real quick is if we go onto the EIA website, we can kind of see oil prices right here. And if we're just looking at oil prices for the month of May, well, it looks pretty bad. So here we have $4.18, $4.32, $4.49, $4.59. So it's just been going straight up. So I hope you guys enjoyed this video, and I'll try to get some timestamps down here just so you guys can cherry pick your information. And I'll also leave a download link to the weekly risk ranges, as well as the news events that I covered earlier in this video. So I hope this is helpful, and you guys have a great week.